Okay, so what are you saying, people, and welcome back to your favorite YouTube channel. Today we're talking about the 4 rules of trading psychology. As we all know, trading psychology is a vital part of our trading, and I've got 4 rules we all should be living by in these markets. If you are new to the channel, please be sure to like and subscribe if you haven't done already. Hit the bell so you don't miss out on any uploads in the future. But without further ado, let's get into the video. Okay, so rule number 1 is trading plan. Now, this is essential. I'm pretty sure all of you guys have heard this a million times, but there's a reason for it because it is essential. Even the most skillful, the best traders ever to live will be emotional wrecks if they didn't have a trading plan to start with. Again, a lot of these traders who have been trading for many years probably have the trading plan ingrained in their brain, but definitely to start off in their career, they would have had very detailed trading plans. And again, when you're starting any business, doesn't matter what business you're starting, you will have a business plan, and it's the exact same with trading. You need a trading plan because if you're just trading any setup you see just because it looks good, it's not sustainable, because that's all to do with emotions. You got a feeling that it might go up or down, therefore you're going to trade it. And use something that is hard, tried and tested, that actually does have a mathematical edge in the markets over a period of time, a long period of time. And as a result, you can base a trading plan around that, and this will keep you sane. This will keep you emotionally in check, because all you're doing is carrying out, trade after trade after trade, seeing the probabilities play out, sometimes for you, sometimes against you. But after a long period of time, 20, 50, 100 trades, you will come out on top. Knowing this, as a pretty much certainty, will keep you sane. If you take a loss, it doesn't really matter, because after multiple trades you will end up on top. This will keep you sane. Again, this has happened to so many traders, including me myself. I think I understand what I'm doing, but I don't have a concrete plan. My emotions do creep out eventually, whether I like it or not. So having a trading plan, a very detailed trading plan as well, I do have a video on that, so feel free to check it out in my Forex education playlist. I go through it in detail for every single section you want to be having in your trading plan. But this rule number 1 is a must. Again, all these 4 rules are a must, but you need to have a trading plan if you want to survive in the markets long term. Okay, so on to rule number 2, which is financial safety net. Now, this is very important to avoid desperation in the markets, because desperation will kill you. Whether you're trying to win the next trade, trying to make money, trying to make an X amount, that kind of desperation, trying to force that to happen, will normally mean you do the exact opposite. You end up losing money. So having a financial safety net, whether it's income, you have a second job, part-time job, full-time job, or you just have some money in savings, having this kind of financial safety, security, will allow you to be more calm and more logical in the charts and not so emotional. Because a lot of people coming into the market just trying to get rich quick, or just trying to make a lot of money, or trying to replace their jobs very, very quickly. But the reality of it is it takes time, and being desperate in the markets, for me, just actually pushes the kind of the date where you become profitable a lot further down the line. So avoiding desperation is very, very important. And if you're trying to make money very, very quickly from the markets, you're always going to be desperate, and you're going to be anxious when you lose, because you're like, oh crap, I need to make money now. And having that feeling going into the next trade makes you very, very anxious. This is not a good place to be. So having a financial safety net, like I said, savings, part-time income, full-time income, whatever it is, will allow you to be more relaxed and calm on the charts, and a vital part of your psychology going forward in trading. Okay, so now on to rule number 3, which is confidence. Now, confidence is vital for anything, especially in trading. If you're not confident, you won't have the kind of determination to see out your trading system, because I always compare it to like doing stunts on a bicycle. If you're not confident, doing a stunt on a bicycle, say a backflip, for example, you could have the skill set needed to do the backflip on the bicycle, but if you're not confident to do the backflip in the bicycle, you can really injure yourself. And it's that same in the markets. If you're not confident seeing out the strategy through the rough parts, through the good parts, winning streaks, losing streaks, you would disrupt your pattern, your probability of your trades playing out, and you could spiral out of control very, very badly. So confidence is vital in the markets. It keeps you sane, through the losing streaks, through the winning streaks, because all you need to do is just apply your trading system. And the best way to build confidence in the markets is simply back test, forward test, collect data, prove to yourself that your trading system works. If you can prove that to yourself, then it becomes much easier just to trade and apply that same strategy. Also, trading live markets, past results, if you were trading for the past 6 months and you were profitable, that will obviously add to your confidence. And if you don't have a big account, maybe start off a small account, start just trading that in the live conditions, applying that strategy to build confidence. And then when you get to larger capital, will become a little bit easier. Obviously, you need to adjust your confidence to trading large capital. That's a story for another video. But as long as you have the confidence in the system itself, that will definitely help you and definitely set you apart from a lot of people. So remember, confidence, best way to get it is through practice and experience. But once you get it, it makes everything a lot easier. Okay, so now on to the fourth and final rule, which is to focus on you versus you. Now, this is still very important. I say this because especially now with so many people online, you want to compare yourself to other people to see how well you're doing. But the thing is, you want to be focusing on yourself. Where were you last month, last year, and now where are you now, and where can you be next month, next year? That's the real focus you want to be on, because you can compare yourself to whatever trader you want, but there's always going to be a different story behind them. Everyone's trading different strategies, different risks, different trade management, different risk management, different psychology, different pairs, different sessions, different markets, you name it. There's so many different factors, going into a person's trading. Even someone who's trading the exact same strategy as you, they'll still take different trades, they'll still trade on different pairs, use different risk management, exit slightly earlier, enter slightly earlier, maybe have a slightly more riskier stop loss, maybe they'll only focus on a specific element of that strategy. So there's so many different things you could do to have different results to another person. In fact, it would be very difficult to have the exact same results as someone else, even if you are trading the exact same strategy as well. So comparing yourself, completely to another person is the wrong thing to do, because it's always a downhill. It's always a losing battle. You can't really compare yourself to that person. You can only compare yourself to yourself yesterday, to yourself now, and where you want to be in the future. And again, this will cause you to be very emotional too if you compare yourself to others. The first 3 rules, trading plan, we went over confidence and also financial safety net. These all can go out the window if you start focusing on other people. So focus on yourself, where you want to be. Are the habits and the activities you're doing now, are they going to get you to where you want to be? If not, then you need to change them. Don't really bother to what other people are doing. Yes, come together, learn together. That's all good. That's all positive stuff. But at the end of the day, it's your trading account. You take the buy, you take the sell, you lose the money, you win the money. It's on you. It's on your shoulders. So make sure you're focusing on yourself. Help other people as well. But at the end of the day, it's all on you. So keep that in mind and keep the focus on yourself as well. But yeah, guys, we have come to the end of the video. Those are the 4 essential rules of trading psychology. There's a couple of other points which I'll speak on different videos, but these are the 4 kind of main pillars of trading psychology. If you keep all of these in check, you should be good. There will probably be other small kind of details that each and every person has their own kind of insecurity that they could work on, but those are the 4 main pillars that everyone should be focusing on. So I hope you have found the video useful. If you have, drop a like on the video, subscribe if you haven't done it already. But thank you so much for watching the video, and I'll catch you all in the next one.